Hello and greetings to Streetwise Economics. Today, I'm going to be giving you an update on my $15,000 trading challenge and particularly just sharing with you the highlights of the trades that I took on January 2. That was the first trading day of 2025. And now, for those who don't know me, my name is Isaac Jonas, and I like to talk about money, the financial markets, and I particularly like to invest and trade in the US and Canadian stock market. But I like the US market is a lot more because there's a lot of debt, and also a lot of liquidity. I also have authored the book, The Intelligent Millennial Investor, which you can find online if you want a copy, wherein I share my experiences investing. And I'm also uh, going to publish another book on trading, which mostly I share some of the insights and some strategies that I use in my trading. Academically, I am an economist by training. I completed my first degree at the University of Zimbabwe in 2010. And then I worked for a little bit and then moved to Canada, where I then completed two master's degrees from the University of British Columbia, namely Master of Food and Resource Economics and Master of Arts in Resource Environment and Sustainability. And throughout my experiences at UBC, I was also funded. I had the Mastercard Foundation Scholarship and also quite a number of other fellowships that I got, including some from my remarkable supervisor, Dr. Rashid Smaila. Now, what I've been learning in the markets as a retail investor and retail trader is that it is very, very important to pay attention to updates and also understand the noise and the nuances that can potentially move the market. Now, this is something that I'm passionate about, and hence that's why I create some insights through videos and sharing my thoughts on writing. I write for newspapers in Zimbabwe and also on my newsletter, weekly newsletter, and also website that is www.streetwiseeconomics.com. And if you want to be part of that weekly newsletter updates where I share exclusive insights, you can sign up on my website. Now, like I've always been saying in my videos, investing or trading comes with risks. The risks are even elevated if you don't understand what you are investing. That's why it's a good idea if you don't understand, it's a good idea to consult a financial advisor, or even if you want to talk more about how to invest in the markets, you can also reach out to me for a paid consultation. But at the end of the day, people have different risk tolerances and different financial situations. So it's very, very important to be careful. In this case, this video is not supposed to be taken as investment advice. This is just a challenge that I want to see how far I will grow this account. Now, just as a background, you can see here, this is my account. I took two trades. That was these trades, 700 shares for UVIX and TSLL. And you can see that my account so far has grown by 5.72%, right? So this is on this side, these are US dollars. My broker gives me the option for trading in US dollars or Canadian dollars for Canadian denominated securities, Canadian dollar denominated securities, but also if I want to trade those stocks that trade in US dollars, which is most of the case. So I have both. So this means on 2 January, I made $119.07 US dollars. But what is important to see is that even though I have about 15,000, almost now 16,000, which I've grown it slightly, I'm not going very aggressively, because what I've seen is that when I'm trading, the key thing is to look to balance the risks and also the potential of the reward. So if I am able to win more, to score most wins at lower risk, yes, losses are going to come for sure. That's one guaranteed thing about trading. But if I am able to aggressively limit my losses whilst increasing my upside, which is something that is extremely difficult, then that's how you grow the account. So I would rather, even though I can take trades for like 15,000, but you see, in this case, I have a margin account, which means I can borrow, even they can give me money, so I can even open positions maybe for 50,000 or so. But most of the money will be on borrowed money. So I don't want to do that. The only reason why I do a margin account when I'm trading is obviously here in Canada, that's where you're supposed to trade. But you see that if I'm trading in a margin account, there's what is called the T+1 rule. In other words, if I buy and sell, right, the money takes, at least one day to just settle, right? So if I trade today, tomorrow the money will be settled because I'm buying and selling shares. So the broker and where I bought the shares, they have to do the accounting, right, to balance the books and then credit and debit the money. But the margin account, the advantage is that as soon, even if I have, let's say, 50,000 margin account, right? That means I will be able to, let's say if I see I want to take trades maybe for 20,000, but I'm taking maybe 5,000, 5,000, 5,000, for example, 4 trades. What that means is I can still be able to make those trades without having to wait for the money to be cleared. So that's why I do that. So I just do the trades, but I will not be charged interest as long as I use the money that is strictly on the money that I funded. I don't use the borrowed money. The disadvantage of borrowing is that if the trade doesn't go your way, you may be forced to actually sell, because in this case you can leverage on another account, right? That is cash or shares. So if that stock that you are trading drops and it drops, then you can get what is a margin call, and they can call you to say, hey, if you don't execute, if you don't add, you should add some more money here, because if you don't, we are going to liquidate their positions. So what that means is that you are more likely to lose. And usually what happens is, as soon as that happens, the market may even go up. So for me, if I have my money and if it goes down 30, 40, 50, 60%, if I had made a trade and if I don't have a stop loss, and if it's my money, I can just wait, right? If it then comes up, that's what people call holding a bag. But at the end of the day, I want to have very calculated risks to take a trade, get in and get out, and sometimes I swing trade. But these are some of the nuances. And you can see each time that I take trades, I like to get notification that I got in and I got out. So these 2 trades that I did, UVIX and TSLL, and I walk you through that trade. What happened on 2 January 2025, I woke up and I saw that this was pre-market trading. In my broker, they open at 6:30 Pacific Standard Time, which is 9:30 New York time. And I noticed that this pre-market, the VIX was really down, and I was anticipating that there was going to be more likely some sell-off, people doing tax harvesting. And when I have seen historically, usually the first day is like, sometimes it's positive or negative. But the VIX, like I said, this ETF, UVIX, and this is not a recommendation, by the way, I've seen that in most cases it moves in opposite to the S&P 500. So if the S&P 500 goes down, it usually goes up. So that's the rationale, but there are a lot of nuances that I consider in doing that. Technical analysis, fundamental analysis, understanding, is there any news that I believe might actually have a probability of moving a market in a certain direction? If I'm right, then I make money. If I'm wrong, I lose money. That's what the market does. The market, that's how it works. It punishes you if you are wrong. Now, I got in at this point, you can see the green, right? So I got about 700 shares for UVIX, and then I average down here, right? That means I didn't buy the 700 shares all at once, and I also have other accounts. So it just shows for the trades that I did for that particular day. But the point is, my average was $3.21, and when the market opened, sure enough, it went up. You see these bullish candles, and then I sold at this point. But what I usually do is I like to lock in the profit. Once I see the profit here, let's say it goes to 340, I then put a trailing stop loss. In other words, I put 338, and then I put the upper limit. So if it continues to go up, I'm just going to change my stop loss. That way, if it drops, like what happened here, it went up, but it kicked me out at this level, right? So what that means is that I'm able to protect the profit if I get, the trade or the instruction gets executed, which has been the case. It sometimes may jump, may not execute. That's why sometimes, it's very important to pay attention to trading. So this was just a day trade. That means I got in 40 minutes. In a few minutes here, I had made some money and I had to pay attention to other things. Now, so at the end of the day, I made this amount, but their fees, usually my broker charges about, let's say $10 if you have 1,000 shares. So it depends, right? But the good thing is when I'm buying exchange traded funds, I don't get charged, right? They only charge me when I'm selling. Unlike other brokers that can charge you maybe $10 or $10, that means you have $20, you have to break even. So this was the trade, like I indicated, this was on a trading view chart, right? So that's how it works. And now, as I wrap up, don't forget to subscribe on this channel so that you can learn more and see how I am able to proceed. I'm not specifically setting a target, but I just want to see how this is going to pan out. Am I going to grow this account? Am I going to blow the account? So that's where the challenge is. I don't know the answer, but I will be updating you. But things that I've learned is that it's important to understand the US economy as a whole, but also things that can potentially move the market. Some of the things are very unknowable. There's no way you can possibly know some of the things, but when they happen, they can really move the market. So that's why it's very important to balance the possibility of an upside and also the downside so that you don't blow the account. So that's the balance that I want to try to strike, to say I want to also grow my account without necessarily risking too much. So that's something that I have been trying to do. So in this process, I am learning to master my emotions, to plan entry and exit points, but also, like I've said in the other video, what gives me peace of mind is that I don't only make income from trading. I do other things. I coach, I write books, and sometimes from time to time, I take profits from my long-term positions that I will be investing, but also I have a partner who is working, so that kind of helps, and other income streams. But at the end of the day, I think that's something that helps because I don't have to take a trade necessarily just because I have to pay for bills. So that's something that I found to be helpful. But more importantly, being knowledgeable, understanding what you are doing. And I also journal all these trades and write my feelings to say, why did I get out of this trade? Sometimes I got scared. I'm a human being, right? So at the end of the day, that's why it's important to master emotion. Sometimes, like the other time, I closed the trade because I had to pay attention to something else, right? So at the end of the day, that's something that is important, right? So if you haven't subscribed to this channel, please make sure you do so that you can also uh, see how this goes, but also share with me if you are also doing some challenges or if you want to learn more about trading. I write extensively, like I said, on social media handles. You can find me there. Feel free to comment on this video so that we can share and grow our wealth together. I hope you have a fantastic 2024. May the markets be on your side. And like I always like to say, trade and invest wisely. Isaac Jonas signing out of here. Bye-bye for now.